Investment strategies play a vital role in achieving long-term financial growth and building wealth. By carefully planning and implementing effective investment strategies, individuals can maximize their returns and secure their financial future. 1. Set clear investment goals. Begin by defining your investment objectives. Are you aiming for long-term growth, capital preservation, or income generation? Clearly understanding your goals will help you select the most suitable investment strategies. 2. Consider your risk tolerance. Evaluate your risk tolerance level, as it will determine the proportion of aggressive or conservative investments in your portfolio. Younger individuals with a higher risk tolerance may opt for more aggressive strategies, while those closer to retirement may prefer a more conservative approach. 3. Invest in index funds or exchange-traded funds. ETFs. These passive investment vehicles provide diversification and low-cost exposure to a broad market index. They are suitable for investors seeking long-term growth and are a popular choice for beginners. 4. Research individual stocks. For those interested in stock investing, thorough research is crucial. Analyze company fundamentals, market trends, and financial indicators before making informed decisions. Consider a mix of growth stocks and value stocks based on your risk profile. 5. Seek professional advice. If you lack the time or expertise to manage your investments, consider consulting a financial advisor. They can provide personalized guidance based on your financial goals, risk tolerance, and market expertise.